The American car market is about to experience the biggest collapse in over a decade. And if you're smart about timing, you could save $20,000 or more on your next vehicle. Last week, a Ford dealer in Ohio told me something that should terrify every automaker in America. They have over 400 vehicles sitting on their lot that nobody wants to buy. Cars worth $15 million just collecting dust and losing value every single day. This isn't just one dealership having a bad month. This is happening coast to coast, and the financial bloodbath is just getting started. Major automotive brands are quietly panicking as inventory piles up to dangerous levels. Some models have over 1,000 days of supply sitting unsold. That means it would take nearly 3 years to clear current inventory at today's sales pace. But here's what nobody in the industry wants you to know. This catastrophic miscalculations, changing buyer behavior, and economic forces that are about to reshape how Americans buy cars forever. And for smart buyers who understand what's happening, this represents the greatest car buying opportunity in over 20 years. The warning signs have been building for months. Dealers across America are drowning in inventory they can't move. Manufacturers are offering incentives that would have been unthinkable just 2 years ago, and some of the most recognizable names in automotive history are facing potential extinction. What caused this perfect storm? Which cars should you avoid, and which ones represent incredible deals? By the time this video ends, you'll understand exactly how to navigate this market collapse and potentially save more money than you ever thought possible. Let's start with the numbers that automotive executives hope you never see. Right now, there are over 4 million unsold vehicles sitting on dealer lots across America. That's enough cars to fill every parking space at over 200 major shopping malls. These aren't just economy cars that nobody wants. We're talking about luxury SUVs, electric vehicles, and even some of America's most beloved truck models. The Ford F-550 Super Duty has a mind-blowing 2,300-day supply in some regions. That's over 6 years of inventory at current sales rates. The Ford F-350, once considered unstoppable in the truck market, has similar problems with dealers sitting on over 600 days of old model year inventory that buyers are rejecting in favor of newer versions. But trucks aren't the only casualties. The Volkswagen ID.4 electric crossover was supposed to represent the future of German engineering in America. Instead, dealers report bloated inventory and complete consumer indifference despite massive cash incentives. Even the iconic Ford Mustang, a symbol of American automotive culture for over 60 years, has models sitting unsold for over 400 days. Here's where it gets really interesting. The collapse isn't hitting all brands equally. Some manufacturers made calculated bets that backfired spectacularly, while others are watching their entire business models crumble in real time. Take Chrysler, once a pillar of American manufacturing. They've been reduced to just 3 aging models, and their dealer network is collapsing. Over 30% of Chrysler dealerships have either closed or dropped the brand since 2020. When your support network disappears, even good cars become risky purchases. But Chrysler doesn't make good cars anymore. Their vehicles are depreciating at nearly double the rate of stable competitors. Then there's the luxury disaster unfolding at brands like Jaguar and Alfa Romeo. The Jaguar F-Pace was supposed to compete with German luxury SUVs, but instead became one of the least reliable vehicles Consumer Reports has ever tested. Alfa Romeo's American sales have collapsed to under 1,000 units per month nationwide. These aren't just sales slumps, these are death spirals. Even mainstream brands aren't safe. Nissan, once known for affordable reliability, has seen their reputation destroyed by transmission failures that cost thousands to repair. Their Sentra and Pathfinder models have become automotive pariahs that depreciate faster than buyers can make payments. But the real story isn't just about which brands are failing, it's about the massive overcorrection that's created this crisis. During the chip shortage of 2021 and 2022, dealers couldn't get enough inventory, cars were selling above sticker price, waiting lists stretched for months. So manufacturers and dealers did what seemed logical at the time. They ramped up production and placed massive orders for 2023 and 2024 model years. The problem is that the market they were preparing for no longer exists. Interest rates skyrocketed from near zero to over 7% in some cases. That turned a $300 monthly payment into a $500 payment overnight. Suddenly, buyers who could afford new cars in 2022 were priced out of the market entirely. At the same time, used car prices began falling from their pandemic highs. Why finance a new car at 7% interest when you could buy a 3-year-old model for $15,000 less? The math stopped making sense for millions of American families. Then came the electric vehicle transition chaos. Manufacturers invested billions in electric models, betting that consumer demand would follow government mandates and environmental concerns. Instead, EV sales growth stalled as buyers realized that charging infrastructure, range anxiety, and repair costs made electric vehicles impractical for many lifestyles. The result is a market flooded with vehicles that buyers either can't afford or don't want. And when supply massively exceeds demand, prices collapse. We're already seeing it happen with specific models, but the broader market correction is just beginning. Here's what smart buyers need to understand. This collapse is creating a two-tier market. Reliable, proven models from stable brands are holding their value reasonably well, but everything else is in free fall. Luxury vehicles that sold for $60,000 2 years ago are now worth $35,000. Electric vehicles are depreciating at rates that would make cryptocurrency investors nervous. The brands hit hardest are the ones we've been warning about for years. Nissan vehicles are losing value so fast that buyers who financed them in 2022 already owe more than their cars are worth. Jaguar and Land Rover models are becoming orphaned assets as their dealer networks contract and parts become scarce. But the opportunity for smart buyers is enormous. If you know which vehicles to target and which to avoid, you can save massive amounts of money. The key is understanding which brands will survive this collapse and which ones are circling the drain. Toyota and Honda remain the safest bets. Even in this chaotic market, their vehicles hold value better than competitors. The Toyota Camry, Honda Accord, and Honda Civic continue to represent smart long-term investments. Their reliability reputations mean they'll retain value even as lesser brands crater. Subaru is another winner. Their all-wheel drive vehicles serve specific market needs that electric vehicles can't match yet. The Forester and Outback remain smart purchases, even as luxury SUVs lose value. In the luxury segment, Lexus continues to outperform European rivals. The ES sedan and RX SUV offer luxury experiences without the maintenance nightmares that plague German competitors. When BMW and Mercedes models are losing value rapidly, Lexus vehicles provide stability. But here's where the real opportunities exist. As dealers get desperate to move inventory, they're offering deals that seemed impossible just months ago. 0% financing on select models, cash rebates exceeding $5,000, trade-in values inflated well above market rates to make deals happen. The timing strategy becomes crucial. If you need a car immediately, focus on models with high inventory levels where dealers are motivated to negotiate. Avoid anything from struggling brands unless you're comfortable with potential service issues and rapid depreciation. But if you can wait 6 to 12 months, the deals will get even better. As model year 2025 vehicles arrive, dealers will become even more desperate to clear 2023 and 2024 inventory. The pressure to move old stock will create pricing opportunities we haven't seen since the financial crisis of 2008. Here's what to watch for. Any vehicle sitting on lots for over 100 days becomes negotiable. Dealers pay interest on flooring loans for unsold inventory. After 4 months, they're losing money every day a car sits unsold. That desperation becomes your leverage. Electric vehicles represent the biggest wild card. Current EV owners are discovering that depreciation rates are brutal and charging infrastructure remains problematic. But if you have home charging capability and short commuting needs, heavily discounted electric vehicles could offer incredible value. Just avoid brands with questionable long-term viability. The collapse timeline is accelerating. Industry analysts predict that by spring 2025 we'll see the first major brand exit the American market. The smart money is betting on brands like Chrysler, Infiniti, or Mitsubishi being the first to throw in the towel. When that happens, it will trigger a broader panic as consumers realize that buying cars from unstable manufacturers is financial suicide. The flight to quality will intensify, making reliable brands even more valuable while everything else becomes essentially worthless. For buyers, this means acting strategically. If you're considering a vehicle from any questionable brand, move quickly while dealer support still exists. But if you can afford to wait and buy from stable manufacturers, patience will be rewarded with incredible deals. The American car market is experiencing a once-in-a-generation collapse. Brands that seemed invincible are fighting for survival. Dealers are drowning in inventory they can't move. And consumers who understand what's happening have the opportunity to save more money than they ever imagined. The key is separating the winners from the losers before it's too late. Choose reliability over flash. value stability over discounts on problematic brands, and remember that in a market this chaotic, the biggest risk isn't overpaying for a good car. It's getting stuck with a cheap car from a brand that won't be around to support it. Which cars are you considering in this crazy market? Have you noticed dealers becoming more desperate to make deals? Drop your experiences in the comments below. And if this market analysis helped you understand what's really happening in the car industry, hit that subscribe button. The next few months will bring even more dramatic changes and you'll want to stay ahead of the curve. Thanks for watching and happy car hunting in this buyer's market of a lifetime.